Hello and welcome to this video on how to be successful in trading. Trading can be a lucrative venture, but it is not without its challenges. In this video, we will discuss some key tips that can help you become successful in trading. Whether you are a beginner or an experienced trader, these tips will be useful in achieving your trading goals. Tip number 1, develop a trading plan. The first step to becoming a successful trader is to develop a trading plan. A trading plan is a written document that outlines your trading strategy, goals, risk management techniques, and trading schedule. It is essential to have a plan because it helps you stay focused and disciplined, which are two critical components of successful trading. Your trading plan should include your preferred trading style, such as day trading, swing trading, or position trading. It should also include your risk management techniques such as stop-loss orders, position sizing, and diversification. Your trading plan should also outline your goals, such as your desired return on investment, ROI, and the time frame in which you hope to achieve your goals. Tip number 2, learn from successful traders. One of the best ways to become a successful trader is to learn from successful traders. You can do this by reading books, attending seminars, or following successful traders on social media. Learning from successful traders can help you develop new trading strategies, improve your risk management techniques, and gain a better understanding of the market. But learning from successful traders is important to keep an open mind and avoid blindly following their advice. Remember that every trader has their own trading style and risk tolerance, and what works for one trader may not work for another. Tip number 3, master technical analysis. Technical analysis is the study of past market data, primarily price and volume, to predict future market movements. It is a critical skill for successful trading because it helps traders identify trends, support, and resistance levels in trading opportunities. To master technical analysis, you need to learn how to read charts and use technical indicators. Some popular technical indicators include moving averages, relative strength index, RSI, and Bollinger Bands. It's also important to understand how to interpret chart patterns such as head and shoulders, double tops, and triangles. Tip number 4, practice risk management. Risk management is one of the most crucial components of successful trading. Without proper risk management, even the best trading strategy can result in significant losses. There are several risk management techniques that traders can use, including stop-loss orders, position sizing, and diversification. Stop-loss orders are orders placed with a broker to sell a security when it reaches a certain price. Position sizing is the process of determining the appropriate size of a position based on the risk of the trade and the trader's account size. Diversification is the practice of spreading investments across multiple assets to reduce risk. Tip number 5, keep a trading journal. Keeping a trading journal is an excellent way to track your progress and improve your trading skills. A trading journal should include details of each trade you make, including the date, the security traded, the entry and exit prices, and the reason for the trade. It should also include notes on your emotions and any mistakes you made. By keeping a trading journal, you can identify patterns in your trading, track your progress, and identify areas where you need to improve. It is also a great way to stay disciplined and focused on your trading goals. Tip number 6, manage your emotions. Emotions can be a significant obstacle to successful trading. Fear, greed, and FOMO, fear of missing out, can all lead to poor decision-making and significant losses. To manage your emotions, you need to develop a trading plan, stick to your risk management techniques, and avoid impulsive decisions. Once traders achieve success in their trading career, they make progress to various paths depending on their individual goals and interests. Here are some common paths that successful traders may take. Manage a hedge fund or investment fund. Many successful traders may choose to start their own hedge fund or investment fund. This allows them to manage other people's money and earn a percentage of the profits generated by the fund. These funds can be highly lucrative and provide a lot of autonomy and independence for the trader. Become a portfolio manager. Portfolio managers are responsible for managing the investments of a group of clients, such as a mutual fund or pension fund. Successful traders may progress to this role as they have the expertise to analyze market trends and make informed investment decisions on behalf of their clients. Trade for a proprietary trading firm. Proprietary trading firms are companies that use their own money to trade financial assets. Successful traders may progress to working for one of these firms where they can continue to use their trading skills to make profitable trades for the company. Teach trading. Successful traders may also choose to become educators and teach others about trading. This can be done through writing books, creating online courses, or hosting seminars and workshops. By sharing their knowledge and experience, they can help others achieve success in their own trading careers. Venture capital and startup investing. Some traders may choose to invest in early-stage startups or new ventures. By leveraging their financial expertise, they can identify promising new businesses and invest in their growth. This can be a high-risk, high-reward strategy that requires a lot of research and due diligence, but it can also lead to significant returns. Investment banking. Investment banking involves helping companies raise capital through underwriting securities offerings, providing advisory services for mergers and acquisitions, and managing initial public offerings, IPOs. Successful traders made progress to this role as they have a strong understanding of financial markets and can help companies navigate complex financial transactions. Work for a trading platform or exchange. Finally, successful traders may choose to work for a trading platform or exchange. These companies provide the infrastructure and technology that allow traders to execute trades and manage their portfolios. By working for one of these companies, traders can use their expertise to improve the technology and services provided by the platform or exchange. In conclusion, successful traders have many paths available to them once they have achieved success in their trading career. Whether they choose to manage a hedge fund and become a portfolio manager, teach trading, or pursue another avenue, they can continue to leverage their skills and expertise to achieve financial success and make a positive impact on the financial world. We hope you enjoyed our short video and you're a little more knowledgeable about how to become a trader. Best of luck to you and thanks for watching. Don't forget to like, comment, and subscribe. See you soon.